Guys, in our today's Multibagger series, today we are going to focus on India's natural gas companies because the Indian government has given them the permission to raise their gas prices by 61 to 69%. Friends, this is not a small issue. This is a big plus for these companies because such a huge rise in the gas prices is only going to skyrocket their profit and maximize shareholders' returns in the near future. And just because of this, Morgan Stanley has set out a target of 82% return on these stocks in the next 6 months. Yes, guys, yes. By April 2022, you would receive a return of 82% if you invest now in these natural gas companies. Now, you must be definitely wondering, how did the Indian government give these gas companies to raise their margins by such a huge amount? Friends, we will definitely explain the reasons behind allowing gas companies to raise their margins by 69%, but also analyze who gets the highest margin from this decision. Is it the oil exploration companies like ONGC, Reliance, or Oil India, or is it the refining companies like IOC, BPCL, or HPCL, or is it the transmission companies like Gail, MRPL, or IGL? Let's find that out in our today's show. I am Nilesh Naik and this is your show Infoaction. Now, before trying to analyze how such a huge margin rise is going to impact the earnings of this company, we have to first understand the history of this company. And for this, we have to go into not only their history but also their prehistory. Yes, guys, just a few moments to explain how natural gas is actually extracted by these companies. And for that, we need to go to our prehistoric past just to understand how the whole process works. Now, thousands of years back, when there used to be dinosaurs and big animals roaming on the earth, and when they went extinct, their remains got fossilized and they were buried deep inside the earth crust over a long period. Then, once they were found, the scientists realized that these fossils were rich in hydrocarbons. And what hydrocarbons were good at is producing lots of energy. Yes, guys, whenever a hydrocarbon is burned, it produces huge amounts of heat. And this is helpful in cooking and also powering cars. Now, friends, you must be definitely wondering where does natural gas fit in all this oil exploration process. Now, the way oil exploration works is that once a site is found where there are lots of fossils, the oil company starts pumping highly pressurized fluids into the earth's crust and then it creates a slurry of the fossils, something like you see on the screen. Now, this slurry is divided into two parts. The liquid part is called as crude oil and the gaseous part is called as natural gas. Now, this is further separated and the main byproducts of natural gas which are used by us normal people regularly are LPG, as you know, which is used to cook our daily food, and CNG, which is used as an alternative to petrol and diesel by rickshaws and taxis. Now that we know that how natural gas is produced by these companies, now we have to decide who is going to benefit most from this price hike decision. And the answer is quite simple. The company which produces the highest amount of natural gas is going to benefit the most from this 69% price rise. And this company is ONGC. Yes, guys, ONGC is India's premier oil and gas exploration company. It produces 70% of India's oil and gas needs. And out of the total oil and gas it produces, 60% of it is oil and 40% of it is natural gas. And because of this, now that the price of natural gas is going to go up by up to 69%, ONGC is going to be the biggest beneficiary of this gas price hike. Now you must be wondering, what about the other oil exploration companies like Reliance and Oil India? They will also benefit from this decision, but they are not going to benefit as much as ONGC, because there is a completely different reason for this. Guys, the prices that we pay from the LPG and CNG companies, which we get from the gas distributors like HPCL, BPCL, IOC, these are much lower than what the actual price of natural gas is at the market. Yes, guys, there is a huge difference between the actual price of natural gas, which is being produced internationally and even in India, and the actual price that we pay for the natural gas. This is because of the fact that if we start paying the price of production of natural gas, then it is adversely going to impact the poorer people of India, because the prices are really high, and the impact of this would be that many poor people in India would not be able to buy a basic commodity like cooking gas, CNG, and this would result in many poorer Indian people going hungry and dying out of sheer lack of food, and the government definitely doesn't want that. Then you must be thinking, the government foots the bill for the difference between the actual gas price and the subsidy which is provided for it. Actually, the answer to this is no. The government doesn't foot the bill. What it does is it books the difference between the two prices as a loss in the books of these government gas exploration and production companies. So because of this, what happens is that over a long time, ONGC and Oil India have been showing losses as they were forced to sell oil and gas at the prices as dictated by the Indian government. And this not only resulted in lack of profits for the company, but also loss of returns for the shareholders. However, now guys, the story has completely changed. The government has raised the price of natural gas by at least 61%, and this has dropped the losses incurred by ONGC and Oil India. And as ONGC produces 40% of the natural gas of their total hydrocarbon production, they are going to benefit from it the most, and this can be seen in the intraday price as ONGC stock has gone up by 7%. And now guys, you must also be wondering, what about the other stocks like natural gas refining and transportation stocks? Guys, the problem here is that the price of natural gas is dictated by the government, and it is not at all dictated by any of these companies. So it doesn't make any sense in buying gas refining and gas transmission companies. The best bet is to buy ONGC now, and by April of 2022 at least expect multi-bagger returns. Yes guys, 100% returns in the next 6 months. So guys, that's it for today. Hope that you understood why there was such a sharp rise in the price of natural gas, and how it is definitely going to impact ONGC's margins in a positive way, and how we all as investors and traders can benefit from it and make a multi-bagger returns in the coming 6 months. So let's meet tomorrow in our next episode where we bring another multi-bagger stock. Till then, this is your host Nilesh Naik signing out. Goodbye.